All right, good morning, everybody. Quick mic check. Can you guys hear me? Every time I work with different equipment, I want to make sure. Guys, you getting me loud and clear today? Check, check, check. Nobody? All right, let's see. All right, good morning, everybody. How we doing today? Guys, can you hear me okay? Got a different headset. Just want to make sure. Yep, cool. Thank you. Good morning. Alyssa's yelling this morning. I like the energy. That third cup of coffee got you. That's all right. I do the same thing. My text ends up looking like a ransom note because I tried to hold down shift. That's funny. Guys, it's good to have you. It is the 4th day of the new year. Bobby T, Carl, good to see you guys. I'm excited. I'm excited about today. Got through yesterday, coming into today. I'm probably going to show up tomorrow too. Going to be a good time. Actually, I'm not. I won't be here tomorrow. Just a heads up, and I'll say it again before the day's over. John Novak's going to be teaching the class tomorrow and Friday. He's given me a couple travel days. And then you guys will be stuck with me nonstop. But it'll be good. It'll be fun. Guys, welcome to the class. I'm excited about today. I'm excited about focusing on rules. I'm going to try and change stuff up a little bit just to keep it new and exciting. And I want to extend a special welcome to those of you that are newer to class, maybe on demo, maybe you're learning the software. Appreciating still my favorite name out there. Jerry Crypto. I know I may have a couple other. If I do, I'm just looking for names that I don't recognize. I want to remind you guys, this is your class. This is not a 3-hour lecture. This is a 3-hour conversation between all of us. If you have a question, if you need clarification, I want to make sure that you take a second and ask. More importantly, I want to remind you that while I do not call trades in the classroom, we're going to look at the live market a lot. And we're going to talk about the situations that meet our rules. We'll look at everything that has to do with rules without actually pulling a trigger today. If you have questions about what you're seeing, if you maybe don't understand a concept, I want you to be very comfortable raising your hand, making sure that you're asking those questions. And there's 2 ways to get to where you want to be, guys. I'm going to say this, and then we're going to get on with the day. The first way is annotating charts and getting them in the room. My brother and I were speaking last night, and he goes, you know, the recipe has been the same for 25 years with Nexgen, or as long as these classes have been around. The people that post their charts, the people that annotate their charts, the people that ask questions, those are the people that are off making money right now. The people that are trying to learn the software by sitting in the background, they think that absorbing through listening is going to make them a professional trader. Those are the people that tend to not move as quickly forward. So as you watch the markets today, everybody that has loaded software has capture software. Take pictures. If you see a chart, take a picture right on the chart. It doesn't have to be a trade. Maybe you're just focusing on termination conditions. Point them out. Maybe you're focusing on odds favorable momentum. Make sure that you point it out. Put it in the classroom. Let's make sure that your read is the way it should be. Make sure that your chart reading's getting to where you want it to be. Get that great feedback. But when you do take a trade, write your rules on the chart. Let me know why you got into the market. Show me your rules. Give me an arrow. Talk about your entries. Talk about where you were expecting the market to go, even if it doesn't get there. And then a good idea is to talk about how you felt. Were you confident? Were you anxious? Were you nervous? If you let me know, what we're going to do is we're going to identify some points where maybe you need a little help. You took the perfect entry, but then you were nervous and you moved your stops too quick. Well, we can take a second and analyze the chart that leads the way and see if we can get rid of that anxiety for you. So that's my invitation. Post as many pictures as you can. Ask as many questions as you can. But before I do anything, guys, it's Wednesday, January the 4th. I am going to check my news and see what's going on. Today at 10 a.m., we have some high impact news, ISM manufacturing, job openings. Guys, when you have high impact news, it can move the market erratically. It can make things jump, bounce, skip, hop, all those things that you don't want it to do when you're trading those patterns. I tend to look at news. That's a great time for me to go pet the dog behind the ears or get a cup of coffee, toast a bagel, eat a waffle, whatever. Anything other than stepping in front of that freight train that is the emotional reaction that news provides. And then we go to the Nexgen T3 education page. Guys, everything that you need is on this page. Your template for study, your path to get to where you want to be, everything is available for you on this page. And there's two sections that we look at. We look at the tutorial section. Every rule that we talk about comes from this section. Management things, everything. And then we have the software user guide. And the software user guide is your NinjaTrader how-to. Whether you're using 7 or 8, there's going to be information for you to help you navigate. The screen capture programs is the first section in the software user guide, and it's there because honestly it's the most important thing that you can do, to take those pictures, to share those pictures, to put them in a spreadsheet. And then there's the daily computer preparation for high maintenance. Go through, look at this, make sure that you're running as smooth as you can run. Opening, closing NinjaTrader, moving charts, scaling charts, putting in stops and targets. If you're curious about cryptocurrency, there's a whole section for you. Adding symbols, rolling contracts. We're going to do that in about 2 weeks with crude oil. Downloading tick replay, market flow. Everybody's curious about market flow. This one's going to teach you how to make it look the way you want it to look. If you want to change the synthetic triggers, the way they look, the thickness, all of this is here for you. Guys, if you have a question about anything with NinjaTrader, you can ask it in the class. You can go to the software user guide. And then, of course, your best resource always, if you're having something going on with the software, is Jason Sager. This guy can only, or he can't fix things that aren't broken. That's about the only things that he can't fix. But he's seen everything and he's seen it 1,000 times. If you have questions, ask in class. If I can't answer it, we'll help you find the answers. And then, of course, if we don't have the answer for you right here, your NinjaTrader has a help button. All sorts of great stuff to get you where you want to be. And then we go to the tutorials section. And I'm going to change things up. We're going to go a different direction. I'm going to start by introducing you to the glossary of common terms. There's a few things in here that I want you to pay attention to. And you'll notice that please post pics or questions. Guys, participate in your own education. I can't explain how important that is. Being assertive with your questions. If you're unclear, don't sit in the background. Chances are someone else is unclear as well. Don't be scared or intimidated. I am the warm, fuzzy Novak, and we'll get you all the answers that you're looking for. And then there's two types of trades that Nexgen users typically look for. The first is a high probability trade. This is going to be our focus for the first 30 minutes of class or so. We're going to look at a trade. Gary, you probably have it in pop out, and if you have it in pop out, hit Control V in the chat box and that'll paste whatever you need to paste. Let me know if that works for you. The first trade that we talk about is the high probability trade. Guys, this is when every indicator on every chart agrees with the rules for the trade. Triggers are going to be their strongest, no termination conditions. Everything is going in favor of this trade. This is what we're going to focus on for your first 30 days. We are going to focus on that high probability trend trade. This is a trend trade that when you follow the rules, you find yourself typically winning 70 to 80%. That success is going to breed confidence. And the best thing is this high probability trend trade is going to teach you to read your charts. You're going, there you go, Gary. You're going to be able to open up your charts, look at your indicators, and you're going to understand three key elements: where the market is likely to continue, and your rules are going to put you in a position where you can use that continuation point for entry for a high probability trend trade. You're going to understand where the market is likely to go, and this is going to help you make good choices on profit targets, and you're going to understand where the market is likely to stop. This is what we call a termination condition. Guys, these termination conditions give you an indication that the trend may be over, and as we look for the high probability trend trade, not only recognizing but also respecting those termination conditions are not only going to keep you safe, but they're going to be what sets you up for that best of the best trade. So we're going to focus heavily in the first hour on chart reading, understanding the rules, taking us to where we can open up our charts and get the best of the best information. And then your first 30 days, guys, is going to take you to what we call a medium probability trade. Those of you that are adrenaline junkies, you like the action, you always want to be busy, this is going to help you get to that level. But you need to learn to read your indicators first, because a medium probability trade is defined as when most indicators line up for a trade. However, a small issue exists. Your ability to read your indicators, to be a chart reader, is going to help you identify that potential problem, that small issue. This is going to be the vast majority of your trades, guys, and when you're executing medium probability trades, you're going to take them and manage assertively. Your ability to read your charts is going to help you manage them assertively. And if there's trouble in your way, your chart reading will help you identify it, and you'll be able to go to zero loss as soon as possible, take profits at trouble spots. But medium probability trades are really going to find their way into what you do pretty quickly. Hey, Jose, Happy New Year. 2023 is going to be the absolute best, guys. We are going to take the best trades, and rather than looking for all of it, we're just going to focus on, I don't know, let's ramp up contracts instead. Give ourselves the best chance of success. So we're going to talk about the high probability trend trade, guys. This is going to be our first trade. This is the one that has every advantage on every chart. This is the one that has you identifying where the market is likely to continue. This is the one that has you identifying where the market is likely to stop. And this is the one that's going to help you identify when you have the advantage of momentum. And we're going to keep it simple, and I want you to allow it to be simple. We're going to do these three rules on two charts. On our 13-2 chart, this is your largest chart, your slowest chart. This is like a broad stroke of a brush. On the 13-2, we're going to use the most current bar, that first bar where you see the black highlighted price, and we're going to make a lot of determinations. We're going to be able to understand which direction the market is trending. If the background on your 13-2 is green, we're trending up. If it's down, it's going to be a red background. Committing to trading with the trend is going to be one of the first advantages that you give yourself. There's that old cliche, the trend is your friend. Go ahead for the first 30 days, embrace that. Let that be kind of your mantra. Then we're going to look for rule number one on the 13-2 chart. And the rule number one is going to be strong trigger lines, making sure that we have momentum. And rule number two is going to be making sure that we have no termination conditions. So our first two of three rules happen on the 13-2 chart. And to be honest with you, you don't even need to open that third chart until these rules are met. And this chart is like a broad stroke of a brush. It's giving you that overall look of the market. When these rules are met, when we have strong triggers, when there are no termination conditions, and don't worry, we're going to talk about these in depth, then we go to our 5-1, and our 5-1 is just an entry chart. We're going to refine that broad stroke of a brush provided by the 13-2, and you're going to pinpoint your area of entry where the market is likely to continue, and that's rule number three. We're going to use a limit order, meaning that we are going to be so confident in where that market is likely to continue that we're going to let the market come to us to enter that trade. And we're going to buy or sell a pullback on the smaller, faster chart, and we're going to make sure that we're entering the market at an area inside of favorable large triggers. By doing so, it's going to allow us to reduce risk and to maximize profit potential. So what we're looking at is three simple rules on only two charts, and we're going to make sure that we have the advantages. You know what? Let me show you those real quick. I like to share this one in the room. 3 rules on 2 charts, and here I've put the 3 rules up top and the advantages they provide beneath. Strong triggers, no termination conditions, use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Those areas can be fibs, mid-bands, or 1-to-1s. Guys, this upper section, these are your rules. Rule number 1, strong triggers, gives us the advantage of momentum. Rule number 2, no termination conditions, gives us the advantage of a clear path. And then that rule number 3, by waiting for the market to retrace back to an area, gives us the advantage of an entry where the market is likely to continue. So I want you to think about these rules in 2 ways. I want you to think about them, 1, in terms of the advantage they provide, but more importantly, when you make the decision to break your rules, what advantage are you giving away? What are you forfeiting to enter that trade? And if you begin to think of it that way, it becomes easier to embrace the advantages, to stick to it, and make sure that you're always taking the best of the best. Rule number 1 says strong triggers. Strong triggers is very easy to identify. When you're in an uptrend and your small triggers break above the large triggers are widening and angled in the direction of the trend, as it's a space created between the small and the large that let me know that the odds are favorable for the market to continue up. In a downtrend, when the smalls break below the large, there's a space created, the large are widening, they're angled in the direction of the trend. The odds are favorable for the market to continue down. Guys, it's no secret, I'm a big fan of language, and I think that embracing that advantage, that odds favorable momentum, just reminds you that you're in the best position for success, looking for the next rules to be met. And we commit to this odds favorable momentum because when the smalls enter the large, it's a weakening of the large triggers, and anything can happen up or down. Odds favorable versus anything can happen. Hello, Sophia526. That is a perfect test. Nice to have you in the room. Welcome to Nexgen. You are officially part of the family. Does this support apply to the current bar, Bobby T? Absolutely, it does. And when we go through termination conditions, Bobby, I'm going to pull your picture up and we're going to talk about exactly why it does. But right now we're talking about odds favorable momentum. The space between the two, absolutely, lets us know that the odds are favorable for the market to continue up or down. And guys, looking for this advantage is going to teach you 2 things. It's going to teach you a little bit of patience because you're going to recognize that we may not have odds favorable momentum for the entirety of a move. We're going to wait for them to break away from the large until they return, and we'll look for our opportunities within that area. These circles on the tails represent potential entries for a high probability trend trade. You'll see the same thing in a downtrend. Odds favorable momentum, you can see where it ends, you can see where it begins. These circles on these tails or wicks are potential entries for a high probability trend trade. These tails represent pullbacks on your smaller, faster chart. So when you're studying and you're looking for these odds favorable momentum, guys, here is crude oil this morning. This is a great trick for you guys learning to read the software. Smalls below the large, larger wide, angled in the direction of the trend. If I see a tail, I'm going to circle it. Smalls above the large, you see how they're breaking away, accelerating. We have one of those tails. Guys, these aren't guaranteed trades, but these are potential entries for high probability trend trades. It looks like we just had one. Smalls breaking through. There's a tail right here in the moment. All I'm looking at is my trigger lines on my 13.2, and I'm looking for areas where the smalls are still away from the large. That's the tail end of the move. There's the beginning. There's a small tail right at the end. This may or may not be a trade, but we're going to circle a tail. Do me a favor. Give me a Y in the room if you're with me. if you're understanding that when those small are outside of the large still, from the point they break away until they return, guys, this is where rule number one happens. This is where your advantage is at its highest as you look for the high probability trend trade. I'm just going to scroll back through crude oil today because, guys, this is the key. If you always look for that odds favorable momentum, what you're going to notice is that market tends to continue moving in the direction of the trend. So there we go, all the way back to 2:30 in the morning. And there's one right around midnight. So what have we done? We've identified odds favorable momentum. We've circled the tail if there was one. Look what the market did after that. I don't have any information other than momentum. And look what the market did. So when we have rule number one in place, guys, we have to go to rule number two. And rule number two says, don't trade into a termination condition because we are going to give ourselves the advantage of a clear path. Termination conditions are Fibonacci-based indicators. That's the whole reason we all showed up to Nexgen, right? Fibonacci. They may reverse the market based on a comparison of the T3 trigger lines in that particular area. These areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. These areas can also be a cyan divergence low line or a magenta divergence high line. We're going to see instances where a large chart midband, if the large triggers are a full bar away, or any third divergence in the same area. Guys, the termination conditions is probably the longest list of areas because these are the areas that remove the likelihood of continuation. These are the areas that can create a bounce that may reverse the market. So your job is to give yourself the advantage of a clear path. And it's a two-part process to recognizing termination conditions. The first part, price reaches an area. It can be support, resistance, divergence lines, 1-to-1s. But when price reaches an area, you're going to ask yourself, where are the trigger lines? If support is reached, the trigger lines remain above, this is a termination condition. This is an area likely to stop the market. Rule number two is not met. There are no more short trades. You see the same thing up here to the upper left. Price comes in contact with that support. When it does, none of the trigger lines break through. This is an area likely to stop the market. Rule number two is not met. So in its most basic form, guys, give me a Y in the room if you're with me. Price reaches an area. No triggers through. Rule number two not met. Guys, this is one of the most abused rules for new traders because we get excited about wanting to be in a trade and we are very willing in the beginning to give away the advantage of a clear path. And you're going to see this throughout the day. We're going to wait for advantages. Price reaches resistance. The trigger lines don't break through. Resistance is likely to stop the market. We're not looking for longs, and that keeps us safe. Look at this. Then price pulls all the way back to support. Where are my trigger lines? They all remain above. Support's likely to stop the market as well. Guys, we can't go short and we can't go long, and I want you to write this on a piece of paper. 90% of what we do is simply reading the indicators, waiting for the advantage. Price pulls back up to resistance. Trigger lines are below. There's a termination condition. It reaches this divergence high. Trigger lines remain below. Termination. The second level of resistance, the trigger lines don't follow. This is what we call a pivot stop out. When price exceeds that previous pivot, the trigger lines don't follow and then trades back the other way. Very powerful termination condition, guys. And when you get a pivot stop out right at a Fibonacci area, this is a wonderful indication that the market may be heading the other direction. When this termination condition creates a full reversal, then gives you odds favorable momentum, this is your absolute best of the best trade. And let me go to this one, the first 30 days. Focusing on the 5-1 trend trade that happened after a termination condition, that's your best of the best. So let's go back to terminations real quick. And then Bruce, we're about to answer your question. This is a picture of a pivot stop out at a high, powerful termination condition. This is a picture of a pivot stop out at a low. Price reaches support, the trigger lines break through. This is not a termination condition. This is a potential little bit of overrun. We get a pivot, meaning the market goes from down to up, and that divergence line prints, letting us know that there was a loss of momentum. It's not until the market comes back and reaches that cyan divergence line that we ask ourselves, where are the trigger lines? Well, they all remain above this divergence low. It exceeds it, but then it heads the other direction. This is a termination condition that creates a full reversal. Guys, this is a very powerful indication that this is likely to happen. When the termination creates a full reversal and gives you odds favorable momentum, this is what we call a strong bottom or a good bottom. This is your best chance of success. So here we see it from the bottom. Here we see it from the top. And we're going to see one more from a low. Price reaches these one-to-ones. And look at the momentum. It's odds favorable. The small are below the large. The large are wide. They're angled in the direction of the trend. Our trigger lines tell us that the odds are favorable for the market to continue down. But the one-to-ones are reached and the trigger lines remain above. This is our indication that this area may reverse the market because of that comparison between the area and the T3 trigger lines. When this area stops the market, creates a full reversal, and gives us odds favorable momentum, guys, that's your best of the best look. You're also going to see pivots kind of from the middle of nowhere. They're not coming from fibs. We've exceeded all the fibs. We've broken the area, but we haven't reached the one-to-ones. When this happens, this is where your smaller, faster chart can give you an indication that the change is happening. And this termination condition is applicable on every time frame, but you're going to see it first on a smaller, faster chart. 3 divergence in the same price range may terminate the trend. And this is a very powerful condition when the third divergence happens with the small triggers inside of the large triggers. So what's happened? Divergence is a loss of momentum. When we lose momentum 3 times and our trigger lines go from odds favorable to anything can happen, very powerful indication that the market may reverse. You will see this when a situation like this is happening. Then the market comes up, even with odds favorable momentum. If we see those 3 divergence print, it gives us an indication that the market may be pushing the other direction. This is also a great way for you to manage those medium probability trades. Remember, we're going to manage assertively. If we enter the market and then we get 3 divergences, we have the opportunity to manage out of a trade because the conditions have changed. So we're going to use and recognize these divergences on the smaller, faster chart to help us make good decisions entering and exiting the market. And we're also going to be able to recognize these 3 divergences on a higher time frame, a 13.2, and you can expect larger moves after these great termination conditions. So rule number 2. So Bobby T, sorry, I called you Bruce earlier. Let's look at your picture. Oops. You asked, does this support apply to the current bar? See if I can make that a little bigger for you guys. All right, so Bobby T, let's go through it. Remember, it's a 2-step process, right? Price. Uh-oh. Well, we can wait just a second. Try rebooting the room, Bobby, if you're still in here. I'll give you just a second. But your picture is an absolutely perfect example of recognizing a termination condition. Give me a Y in the room when you're back, Bobby. And those of you that are still with me here, let me write it up here. Two-part process. Price reaches an area. Where are the triggers? Everybody's with me on that one, right? Rule number 2. Bobby T, are you back? I'm showing you in the room. Appreciating, are you with me? Jerry Crypto, are you with me? Price reaches an area. Awesome. Where are the trigger lines? So guys, price reached support, didn't it? Where are the trigger lines? Are they above? All right, Bobby. So we're going to go through that recipe. Price reaches an area, where are the triggers? So Bobby, your current bar has reached support, yes? Do you see it? Where are your triggers, Bobby? Are they above or below that area of support? Above. Therefore, that area of support is a potential termination condition, right? This is an area that's likely to stop the market because those trigger lines haven't broken through the area. There's a couple other great things in here that you'll notice. Your large triggers are still up, and they're above this reversal bar marker. This look, when price reaches an area, when price reaches a midband, and the large triggers remain a full bar away, that's what this reversal bar marker tells me, that there is room for this bar to make a complete reversal bar. That just adds strength to the termination condition and its likelihood to stop the market. Does that make sense, Bobby? Great question. Great picture, too. I'm probably going to steal this picture because I like that one. Price reaches. Remember, we have to let it break to begin looking for trades. What's it look like when we break? Whoops. An area is broken when both the small and the large make it through the area. Support becomes resistance. Small and large break through. This is when we'll start looking for those short trades. So I'm going to go back. And guys, I'm going to put some indicators on this chart. This is crude oil. Let's get some fibs. Let's get some mid bands. Let's get some 1-to-1s. And let's see what we had going on. And now we're going to identify termination conditions together. Here's that midband, Bobby. Here's that same one with the large triggers. Price reaches the midband. It also reaches resistance. It also reaches 1-to-1s. Trigger lines don't break through anything, right? So not only is the midband a termination condition because the large triggers don't follow, you are looking at a stack of termination conditions. And look what the market just did. Over here, price reaches resistance, no trigger lines break through. It comes down to support, no trigger lines break through. Back to resistance. Guys, not only do we have the advantage of recognizing where the market is likely to stop, where it's likely to go, I guarantee you deep pocket investors know the same thing. And this is one of my favorite pictures to show you guys as we go through termination conditions. Support is a termination condition, and the buyers push up. The sellers fight back and try to push down. You're witnessing a fight in the market. No momentum, trigger lines don't really break through, and the buyers push again straight to that Fibonacci resistance. Guys, you have this resistance. You can see it. You see what other small traders don't see. Sellers push back right off. Once again, termination condition, loss of momentum. You're looking at a range-bound market. This is a market that hasn't been able to break out, and you see it. And then everything breaks and that market continues down. Your rules are going to keep you out of this chop. Because look at this. Support, no triggers through. During those times of consolidation, this is not a trade. Resistance, no triggers through. During times of consolidation, this is not a trade. Keeping you safe. Price reaches support. It's the beginning of the consolidation. There isn't a trade. But if we scroll back, we're going to see if there were any opportunities. Here's one. Look at this, 7:21 a.m. We had to be a little patient, right? That's about 2 hours. But look at this. No termination conditions. All the trigger lines are through. We have our tail. When we talk about entries, we're going to come back and look at that one and see what it did. Once again, price exceeds, pulls back to the mid band. The large triggers never turn. It reaches support, pulls back to the mid band. The large triggers never turn. Couple termination conditions keeping us safe. Here we've cleared. But not really odds favorable momentum. Let's see if there was another one. Smalls breaking through the area. We'll take a look and see what it looked like. And then one more up top. So guys, give me a Y in the room. So far we've identified potential termination conditions. We've identified odds favorable momentum. Are you guys ready to figure out how to get into that market? Let's pinpoint with pretty amazing accuracy how to find our entries. Bobby T, when fibs go away, let me see if I can pull your picture up again, because actually, you know what? Let me show you a great picture. I saved this one because this is a pretty common question. This one's called What are the Fibs? So your lines that extend all the way across, these are going to be from your native chart, whether it's a 13.2, the 5.1. Your very skinny ones are going to be 5.1. Your very thick ones are going to be the 21. This is how they accumulate on the 13.2 to help you identify areas. If a Fibonacci area stops printing. So for example, let's look at your picture. I wish I could make that bigger. Here we have the native fib. Here we have a 5.1 fib. So these fibs are all to be recognized. But if, and let's see if we can find an example. There we go. On this chart. This fib has stopped printing. This is a fib that we're not going to look at anymore. As your support becomes resistance, you'll notice that the support quits printing. When the one-to-ones no longer print, they're no longer relevant. And that's kind of what we'll do. A fib may print, and then if it stops printing, we're not too terribly worried about it. As long as these one-to-ones are printing, it means that it hasn't been broken yet, really. So when this divergence prints, price reaches it, goes the other direction. This one stops printing, but that loss of momentum, look at that. Oops. It's still going because that key area hasn't been broken yet until we get a higher divergence. So absolutely, because when price reaches one of those divergence highs, one of those divergence lows, it's a potential termination condition. So whether it's 3 minutes or 3 hours, here's a good example. That divergence from a high prints all the way over, and it lets us know that there's a key area where momentum is lost, where the sellers took over. And as the buyers approach it, we get one of those pivot stop outs with divergence at an area. So this becomes a great indication, and it provides a little bit of an advantage there. Well, you know, Alyssa, I never say it's more than likely, because the reality is it could keep going up forever. When these large triggers turn from a pivot stop out at resistance, then I have a strong top. I try to avoid phrases like it's likely to turn into, or it's probably going to, or, you know, because what I do is I begin to create an expectation in my head. I would rather say this is a termination condition that caused a full reversal that gave me odds favorable momentum. When this order of events happened, I now have a strong top. This was a termination condition that had the potential to cause a full reversal, but if I'm waiting for that full reversal rather than reading my indicators that it's likely going to push lower, I get sucked into waiting for longs rather than noticing that we've pulled all the way back to resistance. My large triggers didn't blink, my small remain below, and I can look for opportunities. Does that make sense? I was notorious for a while. Here's a termination condition, never creates a reversal, right? Potential to be a strong top. But here's that same termination condition. Now we get the full reversal. Now we get odds favorable momentum, and look at how it goes. You could have predicted strong top at any of these places, but until it happens, it hasn't happened. That was a great question. And guys, keep those questions coming. It doesn't matter what it is, because what happens is it creates a discussion, and usually you get more questions answered when you ask them all. So let's pinpoint that area where the market is likely to continue, guys. And I want you to remember right now, all we're focusing on is entries. All we're focusing on is getting into the market, recognizing the advantages. When the advantages are present, now we're going to look for an entry. The 13.2 is in an uptrend. The 13.2 has odds favorable momentum. The 13.2 has no termination conditions. This is what my 5-1 chart's going to look like. I'm going to have up bars galore. My large trigger should be strong, wide, angled in the direction. Chances are I have odds favorable momentum even on that 5-1 chart. This is when I've made the decision it's time to look for an entry because my rules are met. So I'm going to focus my attention on these large triggers, and I'm going to focus my attention on the areas that may fall within them. Remember, areas can be fibs, mid-bands, or 1-to-1s. All we're doing is recognizing that the conditions are right. This is going to be my area to watch. Remember, the rules say we are going to use a limit order to buy or sell a pullback. And a pullback's just a small retracement in price. When everything is going up, Nexgen traders, you're waiting for the market to come down to you. We're going to buy in an uptrend at an area, fibs, mid-bands, or 1-to-1s, inside of favorable large triggers. So when everything says up, we want the market to come down. We want that small retracement. That retracement begins with a reversal bar. And at the time of this reversal bar, you are going to create your window of opportunity. And your window of opportunity is from that highest point of support to that lowest point of support inside of favorable large triggers. And Macomas, I'm going to address that. Let's go through entries because that is very common. You start asking, you start looking for reasons not to trade, right? You start looking for reasons against the trade. Have you ever heard the phrase, guys, you find what you're looking for? If I'm looking for something negative, I'm always going to find it. And I'm going to look for positives. So if you get to the point in your trading, there's only two options. That's it. Makamas, either the rules are met or the rules are not met. So what we're doing right now by studying these rules, by talking about them, by looking at them, we're developing trust in the rules. What we're doing by going back and circling when the rules are met, we're developing trust in the rules. And what you'll find is you'll put yourself in a position. Here's another one right in the moment. You'll put yourself in the position to create trust, a belief in the power of what you're doing. So let's identify our entries and let's talk about the rules, McComas. And I want you to change your mindset. And I did this too. I use the phrase, and you may do this too. And guys, let me know if this is familiar for you. I would say over and over and over again, not my trade, not my trade, not my trade. And the reality of it is I didn't even know what my trade was. I didn't know if it was a high probability trend trade. I didn't know if it was an edge trade or a continuation trade. All I knew is that if I didn't enter the market, I couldn't lose, which means that I had fear. And that fear came from not studying. So we're going to focus on the study, we're going to focus on the simplicity, and we're going to eradicate that fear so that you get to the point where it's either rules met or rules not met. So let's get back to entries real quick, and we'll go through this, and we'll watch the live market today and see what we come up with and talk about rules. As the market starts to make this down, this reversal bar, our window of opportunity is from the highest point of support to the lowest point of support inside of favorable large triggers. So when this happens, I'm simply going to right click and I'm going to activate a limit order. Buy limit 2 at 79.21, right at the top of that window. And one of two things are going to happen. I'm either going to get filled when the market retraces back, hits that limit order, has me enter the market, or the market's going to go without me. Those are the only two things. It's either going to make the entry or it's not. I like to take this picture because I want to remind you, your large trigger lines are here. Let's make that a little more visible. This is from the top of large triggers to the bottom of the large triggers. Your window of opportunity is from the highest point of support to the lowest point of support. So what you're going to see here is that your window of opportunity lies within the large triggers. Give me a Y in the room if you're with me. From the highest point of the large triggers to the lowest point of the large triggers, and then your window of opportunity falls at the areas, fibs, midbands, or one-to-ones inside. This is where the market is likely to continue. Let me give you guys this picture. Put it in your spreadsheet. And I'm taking this trade 1,000 out of 1,000 times. I'm in the market at 79.21. And why am I in the market? Because I have the advantage of odds favorable momentum. I have the advantage of a clear path. And I have the advantage of being able to recognize the area where the market is likely to continue. Absolutely, McComas, I would be in a long trade, bought the market at 79.21. My initial stop is going to go below the window of opportunity at the area where the market shouldn't go. Because if this market pushes beyond where it's likely to continue, where my advantage lies, I want to be out of that trade. And guys, remember, this is a trade that typically wins 70 to 80% of the time. 70 to 80% of the time, this is the result. Which means what? If I take 100 trades, I have to be prepared to lose 20, and I don't get to pick when those 20 are, which is why we develop the trust in the system, in the methodology. And this is why we have to back test the methodology, to go back and look for the absolute best of the best. When the market begins to move in the direction of my trade, I can reduce my risk. Because I waited for the best of the best spot, I've increased my profit potential. So why did we circle those tails? Guys, here's both charts together. On the 13.2, remember, this is after the fact. This is historical study building recognition. Small triggers are above the large triggers. The large triggers are wide. They're angled in the direction of the trend. Give me a Y in the room if you recognize that rule number 1 has been met on this chart. New users, Let me know. Demo people, let me know. This is such an important concept. Rule number 2 says absolutely no termination conditions, which means that we recognize this price bar has not reached resistance. There are no termination conditions present. Our job is done on the 13.2. We have the information we need to look for an entry on the 5.1. And let's do a quick little just reminder for you guys. That's the wrong color. We'll use yellow. It's easy to see. Some people say, but Mart, there's not room to that fib. I can't take an entry here. I've almost reached a termination condition. Has anybody thought that before? I want you to remember that we're going to buy or sell a pullback. I've done it. I've thought, oh, there's no room. But remember, the top of this bar is the top of this bar. And we are going to buy or sell a pullback at an area inside of favorable large triggers. We see the tail and we circle it. If this tail lines up with an area of support inside of favorable large triggers, guys, this is your high probability trend trade, 100%. This is the absolute best of the best. Strong triggers, no termination conditions. This circle lines up with the area of support inside of favorable large triggers. This is your trade. You're not going to know where this tail is going to end. We're not trading tails and waiting for them to happen. This tail is this pullback. There's your entry. If you jump in, you have huge risk and no reward. If you wait for the pullback, you have small risk and huge reward. And this is exactly what we're looking for, guys. So if we go back on what we just did on crude oil, where we circled charts, we circled every time we had odds favorable, every time there were no termination conditions. Here the smalls have broken, the large have not. Smalls are outside. Here's a pretty good example. Pulls right back to an area of resistance inside of favorable large triggers. That's a high probability trend trade. If we scroll back beyond the consolidation, let's find our next circle. 7:07 a.m., guys. You had to wait almost 3 hours for the perfect entry. Let's see if it was worth it. Woo, scrolling. Sorry if any of you guys are motion sensitive. Almost there. What do you think, guys? Smalls below the large, absolutely no termination conditions. Pull back to the area of resistance inside of favorable large triggers. Give me a Y in the room if you see it. This is a high probability trend trade. This is the trade for your first 30 days. Take a picture of this one, guys. Remember, when you annotate a chart, whoops, get your rules on that chart. I uploaded this in the room at the beginning of the day. We can also take a picture of that checklist, right? Let's take that checklist and put it on the chart. Is the market coming from a good top or bottom? I'm not sure. It's not mandatory, but it increases the likelihood of success. Did we have odds favorable? The smalls are outside of the large. There's not a huge space, but they're still outside. Rule number 1 is met. No termination conditions present. Area for entry inside of favorable large triggers. Guys, this trade went from, we'll just say 70 down to 45, 37, right here to these 1-to-1s. 33 ticks on crude oil is $330. If you take the best of the best, why not just take the best of the best on a 10 lot when you get there? That's not a bad run from a rules met high probability trend trade. And I think we had another, didn't we? Let's find out. 3:01 a.m. I don't know about you guys. I was asleep. But even in the middle of the night, these guys know to follow rules. Let's see if it's set up. It may have, it may not. It worked. Pull back directly to an area of resistance inside of favorable large triggers. What does this drill teach you? It teaches you to be patient because the advantages aren't there 100% of the time. But it also teaches you to trust the process. Wait for the pullback. Wait for the momentum. Wait for the clear path and put yourself in the absolute best of the best position for success. Here's your current market right now. I have anything can happen triggers. I've also had 2 divergences. My small triggers are on the wrong side. Not my best of the best look, right? Probably not a high probability trend trade. Definitely not. Here's your S&P this morning. Odds favorable. Doesn't appear to have any termination conditions. This is just triggers. Circle a tail. Let's add our fibs. Let's add our 1-to-1s. Let's see if that tail was going into a termination condition or not. Takes just a second to calculate. Guys, we cleared the area. What did it look like over here? Just didn't quite make it. Not a high probability trend trade. Any other opportunities out there? Looks like at 8:45 we had one. You guys with me on this? Right now all we're doing is studying. Pulls right back just above a mid-band inside of favorable large triggers. I can tell you that this one missed my entry by a tick. Odds favorable, no termination conditions, waiting for the absolute best of the best. Guys, this is your recipe for success in the first 30 days. Going to identify what it takes to get in. There is definitely news at 10, guys. Very high impact. We'll keep the S&P up so you can watch it. You need to write a plan. You need to write out what it's going to take to get you into the market. Guys, I'm going to give you an example plan, and I'm going to give you a copy of that high probability trend trade checklist. Take the time to write down what it takes to get in the market. We'll talk about writing the plan, then we'll watch the live market. Guys, this is your S&P. Notice a little bit of overrun at support, but 3 divergences in the same location. Every lesson that we teach is starting to come true. Smalls above, odds favorable. Don't have that perfect entry just yet, guys. They're probably winding up for news. So while they do that, I'm going to take 5 minutes. When I get back, we'll start looking at your charts, guys. If you have questions, post them in the room. If you have charts, post them in the room. And we're going to watch a lot of live indicators today, talk about what they're showing us, the information it's giving us, and we're going to talk about whether or not the looks that we see fit the rules that fall into that first 30 days, guys. I'll be back in just a few minutes, and then we will continue after a short break. All right, guys, I'm back, and this is why we don't trade into news. But look at this right here. Here's a termination condition that created a full reversal that gave me odds favorable momentum, and it pulled right back to an area of support inside of favorable large triggers. Does that look familiar to anybody? Market was moving a little crazy, a little bit of news there, but it sure looks nice. All right, guys, so the first hour is done. First hour is where we talk about rules, where we're looking for the best of the best. Second hour, we're going to start looking at your charts. We're going to go through and see what you guys were doing. We'll talk about the live market as it sets up. Area of support, absolutely no trigger lines have broken through. Guys, sometimes it just goes without us. We've reached an area likely to stop the market. Doesn't mean that there's a long trade, but look at the bounce. There may not be a short. Let's see what we have, guys. I'm going to scroll up. We're going to start taking a look at what you have. Gary started us off. You'll notice that Gary's using a checklist. He's talking about what he sees, what he's doing, whether or not it's his trade. He does have a good top or bottom in place. No termination conditions, but he doesn't have odds favorable triggers. He says he's not looking for a trade right here. Just doing a little bit of chart reading. Always a good thing to do. Ed coming in. Termination conditions. Tried to go long. That one didn't work out so well. Then everything's going down, and Ed, are you with me? Directly into termination conditions. Guys, it stings a little bit sometimes to put in a loser, but there's a lot to learn from your losers. Alyssa, 2 different charts, different pivots, different momentum indicators. Same reason that the 1-to-1s are different on both charts. Because they're 2 different time frames, which means that there's 2 different sets of movements. Awesome. Ed, rule number 2, all day long. Resistance, absolutely no trigger lines broke through. Rule number 2 keeps you out of this trade. Keeps that money in the bank. And you lost 20 ticks, 40 ticks total. Trading into a termination condition. It's the difference between trading what you see, what the indicators say, and trading hope. You can hope that it breaks, but this is an area likely to stop the market. The comments, let's see what you did. On your 5-1, I'm not entirely sure why you got short here. I said it earlier, I'll say it again. If you guys will do me a favor and write your rules on the chart, it helps me immensely. Because there's different trades, there's different rules. But Makamas, I can't see your entry. So I'm not sure what got you in. Was it the odds favorable momentum to the upside? Was it the support with all the trigger lines above it? Was it the 1-to-1s with all the trigger lines above it? Was it the uptrend that got you short? Do you see how I'm doing this? Was it multiple divergences beneath you? Somewhere on your charts, you said this is probably a short trade. Do me a favor. Write them in there. Guys, I don't judge what you decide to trade. That's not my business. My business is to help you read indicators and to help you become consistent. You writing your rules on the chart helps me with that. Ed, I'm not sure why you don't trade with synthetics. You say they're jacking with you. Everything says down. Why no short trade here? Why no short trade here? No areas inside of favorable large triggers. Remember, guys, it's either rules met or rules not. And if I don't know what your rules are, no area inside of favorable large triggers, you decided to go short without momentum. They're just taking your money. Ed, I would say you're just giving them your money by breaking rules. I think you're making a conscious decision to give up advantages, and they are glad to separate you from your cash. Ed, when there's absolutely no areas between this pivot and that resistance, your best chance of success, Ed, is coming from this area of resistance, an area likely to stop the market, rather than that area in between a pivot and the area likely to stop the market. Does that make sense? Embrace those advantages. You paid good money for these fibs. Trust them a little bit. That's okay. So what are your rules? If there's a magenta line, don't you have to have a good top or bottom to go short from it? Or don't you at least have to have rules for a trend trade made? Your smalls are on the wrong side as you come into that magenta line. Everything says up on your 5-1. You have no momentum. This little magenta line isn't nearly as powerful as these strong red Fibonacci's. Don't get mesmerized with the 8 range if your rules aren't met. Guys, we circled this one. Termination creates a full reversal, gives odds favorable momentum, and there's a pullback directly to support inside of favorable large triggers. John gets in at the highest point, couple ticks above fibs. When it pulls back down, he says, this is so darn pretty. I'm going to add on. Takes profits right up here. Beautiful trade. That's 4 contracts, 8 points each. Very nicely done, John. Ed, pivot from nowhere back to the fib plus divergence. Just in a holding pattern, right? Uptrend, odds favorable, everything says up. Not looking for short trades. Too soon for a long trade. So 50-50 and divergence is printed. Just in a holding pattern. Guys, if you remind yourself that 90% of what we do is going to be reading our charts, waiting for the advantages, you're going to develop this ability to sit on your hands and wait for the absolute best. Waiting for that odds favorable momentum, right? Waiting for opportunity. Not on the ES. Let's see if we can find it on crude. Here we go. Here's resistance. It holds. We get odds favorable. Small below the large, larger wide, angled in the direction of the trend. Guys, in the moment before a reversal bar, can we identify that window of opportunity? These trigger lines are split. That's a big window. Whoop. And now we've reached support, so it starts over. In order to look for shorts, support must break, meaning that the trigger lines have to break through with that odds favorable momentum. And this is what we recognize a lot, guys. When we get a pivot that doesn't come from an area, goes up to that mid band, you'll notice 3 divergences on the 5-1, letting us know that the party's over. And it comes down and finishes the move to the next fib. Welcome to Fibonacci. Everything overruns, pulls all the way back to the mid band, large triggers don't follow, makes it to the next area, overruns, pulls back to the mid band, makes it to the next area. These are all moves that we see a lot. These are opportunities for you to begin to recognize patterns. And now we start the if-then game. If this area is going to hold, these trigger lines are going to roll. But right now, price has reached support. None of my trigger lines have gone through. I'm not looking for opportunities for short trades. Not a lot of pictures yet today. Guys, are you guys trading? Are you being patient? Are you waiting for the best of the best? Being patient. I love it. Do not have odds favorable momentum, right? Rule number one's not met. If we're being conservative in the beginning, we're waiting for something to happen here. We're waiting for the advantage of momentum, the advantage of no termination conditions. We're waiting for a clear path with an awful lot of giddy up behind it. So as we wait for something, while we're waiting for our rules to be met, guys, are there any questions? Are there any concepts you'd like to talk about a little bit more? Just being patient. What a difficult thing to be, isn't it? What's your S&P doing? Came all the way down to 38.36, and at 38.36 we had a loss of momentum. We see it in the trigger lines. We see it with divergence. Now I have odds favorable momentum to the upside. On HVA trades, have you already gone over the HVA trade here? Guys, this is a great second trade. And I love this trade because it takes all the same elements that you've learned with the high probability trend trade, right? Large chart must have a termination condition. What does a termination condition look like? Well, price reaches an area. No triggers break. Don't take the trade until the triggers roll. We understand how to read our triggers. Defining our area of entry, guys. It's the same concepts from the high probability trend trade. Working after tops and bottoms. Let's go to Nexgen videos. Is there a search button here? There it is. So Alyssa, go to the Nexgen Software Services videos page. Let me give you the link. All sorts of HVAs. You can go through, take a look, see what's there. And then the cool thing, and guys, you can do this. If you're watching this video and you don't understand a concept, absolutely, Alyssa. Guys, take a picture just like this. And ask a question. Hey, Mark, what if the triggers break the area? Send me the question. High volume area is what that stands for. And Alyssa, this will run you right through it. And then if you have any questions about it, please just ask. Hey, good morning, Joel. Just being patient, right? I love that you posted that, Joel. Check it out, guys. My rules aren't met. I'm not taking a trade. I'm just going to be patient. I decided to take a picture and remind myself that if I wait for the best of the best, I increase my chance of success. Small's above the large are wide, they're angled, but I have two losses of momentum. This is what we call a 50-50 trade. This is an area that has the potential to break, but hasn't broken yet. This would be what we call a medium probability trade. Has to be managed assertively. When we talk about the 50-50 trade, guys, what we're looking at, let me find my picture. When the small triggers break through an area with strength and the large haven't made it, the area has not broken but has the potential. Based on those strong triggers, your entry conditions must be perfect. What's a perfect entry condition? No divergence on the 5-1. Strong triggers on the 5-1. Tiny window of opportunity on that 5-1. If you took this entry, you have to manage assertively. The area hasn't broken. We have two losses of momentum. A third loss of momentum should take us out of this trade. If you entered at 48, your stop is a couple ticks below that reversal bar. You have minimal risk on a medium probability trade. We'll come back and see how that one pans out. Second layer of support, even less momentum. A lot of waiting, isn't it? Is your account worth it? John doing a little teaching. The HVA line used in the HVA trade. A green HVA line created when there's a white bar up plus one close above the white bar. Creates this line. And guys, all an HVA line is, I think of things as simple as I can. This is where this is where the buyers put a line in the sand. This is where they're taunting the sellers. I dare you to push it back here. We're going to unload every gun we have. But the conditions have to be right. This green line without a termination condition is just a green line. This green line without your triggers rolling is just a green line. So you have to put it all together. Gary, 50-50 with divergence. Waiting for a market flow signal. You got it. This termination condition is still holding on crude oil. Well, Ed, if we were looking for the crude HVA, we now have our termination condition, right? For those of you with the 8 range chart, whoops, wrong one. Alyssa, here's your potential HVA trade. Termination condition. You wait for the trigger lines to roll. We have an HVA line established. Right now we're on our way to textbook. We want a little bit of a push so these large triggers can catch up, and then a pullback to this HVA line right at the large triggers. Creates an opportunity, right? But it's an order of operations. First, you have to have a great termination condition. Then you let the triggers roll, and then you look for the HVA. John offering up a copy of his favorite book, How to Commit Financial Suicide in One Easy Step. Trading against strong triggers. Or trading into termination conditions. Guys, this book is a great read. Absolutely. Alyssa, just go back and take a lot of pictures. And then post every one of them. do a little market replay with the sole purpose of looking for the HVA trade. If I were an HVA trader, guys, my opportunity comes somewhere about right here. I haven't reached the mid band yet. I've had a great termination condition. My triggers have rolled, and my high volume area is right at large triggers, open and head in that direction. That is your perfect HVA trade. Andy Trader, good morning. Andy, you took the 50-50 trade. Smalls above the large have not broken through. Therefore, this is an area with the potential to break, but it has not broken. Two divergences let you know that if you take this trade, a third divergence can create problems. Medium probability must be managed assertively. You make money on the way up. You get that third divergence, and look how it pushes back. Nice job, Andy. Very well done on that 50-50. Textbook. Don't have to be first, right? A little confirmation for you guys looking to add the market flow. Little confirmation goes a long way to getting you in at the best of the best area and keeping this trade manageable. Andy, I think you did it perfect. Nicely done. We didn't make that HVA line, did we? That's all right, Gary. If it doesn't feel good, don't do it. So what do we have here? We have large triggers up, small triggers down. Does anyone have odds favorable momentum? We'll see how that one sorts out. All right. Earl. It's close, Alyssa. We'll look at it in just 1 second. Earl, you like that jump in move? I know you do. And it came back. Can I make an observation, Earl? I hope so, because it's my room. Smalls below the large. The large are wide. They're angled in the direction of the trend. There's absolutely no termination conditions. Earl, do you see how your exit is at an area of resistance inside of favorable large triggers? You took an exit at a rules-based entry. Do you see it? You had rules met across the board. These are things that you'll begin to notice a little bit as you go. You'll start to recognize, okay, where is my stop? Is my stop where the market shouldn't go, or is my stop exactly where I anticipate it to go? All right, ES. We had a termination condition, well, 50-50 that terminated. We had the triggers roll. We had an HVA line right at those large triggers. Alyssa, do you see it? Tapped it to the tick, didn't it? Everything rolled, and there it goes. And on your 5-1, those three divergences gave you the indication that this was just a little bit of overrun. Nicely done, Edwin. Large triggers up. Small triggers down. Three divergences. You were waiting for that and you missed it. It's okay though, because it pulled back and did exactly what you thought it would do, didn't it? And then you missed it when it happened. Little bit of patience, right? There's a big difference, guys. I want you to remember there's two things that can happen. Either your rules can be met or your rules are not met. If you distract yourself with trades that don't fit the rules, if you distract yourself chasing things that don't fit your rules, You're going to miss the ones that fit your rules. Excuse me, that was hard to say. Termination. That HVA is turning into what kind of trade right now? Small's above the large are wide. Here's a pullback. I'm going to leave it on one market for a minute. Directly to an area inside of favorable large triggers. Where are my demos? Demos, I realize that is about 2 minutes late. But do you see it? Appreciating? Which mid-band? Right here? Awesome. Michelle, can you tell me your rule for when a mid-band is a termination condition? I'll tell you mine. Maybe. I just deleted all of my Nexgen. Let's go to the instructions. Large chart mid-band if the large triggers are a full bar away. Are you good with me on that one, Michelle? Let's take a picture real quick. We'll just do this. So let's look at everything that's happened on the 13-2. We have the most beautiful termination condition that I could ever hope for. Price reaches Fibonacci support to the tick. Divergence prints, strong triggers, and when this bar coming into that mid-band, these large triggers aren't a full bar away. So I'm not worried about this mid-band for a couple reasons. One, because the large triggers aren't a full bar away. That's really the rule. That alone should be enough. But when I'm coming from this great termination condition, it gives me just a little more giddy up. Does that make sense, Michelle? And then here we had strong triggers again. Small's outside of the large. But we have two divergences. Two divergence. So we've lost momentum twice. One divergence, strong triggers, everything inside. That's a good looking one. Two divergences, two losses of momentum lets me know that it may push a little bit lower. So let's talk about patterns. Everything that we trade revolves around patterns. When I have two divergences on my 5-1, very often it takes out the previous pivot. That little bit of information keeps me from looking for a short-sided long with two losses of momentum. That's where that previous pivot was taken out. You can use market flow, maybe look for a signal, or you can just stay calm and say, I don't have areas inside of favorable large triggers anymore. Therefore, my rules aren't met. Therefore, I'm not going to take a trade. And we'll just see what happens. Termination, strong triggers. We may just have to be patient and wait for our rules to be met again. Large don't make it through the area. Guys, as the market kind of hems and haws, I'll share some pictures with you. Rule number 3 says favorable large triggers. Guys, here's a picture of favorable large triggers. What's it mean? It means that the large and the synthetic are trending one on top of the other. There's strength, they're overlapping. That's your best of the best trigger look. I want you to look at the large triggers here. There's a huge gap between the two. This is not your best of the best. These flat large triggers are not your best of the best. The area hasn't broken. There's a lot of context clues here to help keep you out of a potential loser. And we're just in the holding pattern. We're waiting for all of our charts to agree. What other pictures do I have? You know what? Let's talk about, we didn't really talk about this. Let's talk about the trading plan. The example plan for new users. Deciding on your best of the best entry. Guys, this is a simple approach for new users to stay focused on that first 30 days. You need to define your trade. What is your trade going to be? Well, my trade's the high probability trend trade. I know that it offers the best chance of success in that first 30 days. I'm going to commit to it so I can learn to read my chart, so I can work myself into those medium probability trades and increase my opportunities. In order to enter the trade, this is entry only, I must have the conditions of this checklist met. Is the market coming from a good top or bottom? Do I have odds favorable momentum? No termination conditions. Area for entry inside of favorable large triggers. In order for me to pull the trigger, these rules must be met. And then I take pictures. Remember, we said a lot of what we do is pictures. I take pictures of that best of the best entry. I want to be able to know at a click's notice what my rules being met look like. If I follow one of these links, it shows me exactly everything that I have written. Odds favorable momentum and no termination conditions and a pullback to an area inside of favorable large triggers. So I'm establishing some ground rules. In order to trade, the rules must be met. As I go into medium probability trades and I start looking at those 50-50 trades when the area has the potential to break but hasn't, maybe I'll say no divergence on my 5-1. Some people say I'll wait for a market flow signal. Small triggers must be outside of the large for entry. And once again, you put the picture of it right into your plan. Guys, you're identifying your entry. If you spend 30 days not concerned with the P&L, not concerned with anything but the entry, it's going to help you a lot. So while you focus on the entry, having a clearly defined management plan that's mechanical, very methodical, it takes the pressure of making decisions. It takes the pressure of having to read your indicators off of you. It keeps you from forming opinions, from getting nervous. Everything is predetermined and mechanical. This is the most basic approach I've seen. I will trade 2 contracts. My initial stop will be 12 ticks, and it will be adjusted above or below that window of opportunity, meaning that I will put my stop where the market shouldn't go. This is my first stop movement. It's mechanical. It doesn't require judgment. It simply means I have to put it below the window of opportunity. I'll move it 2 ticks above or below the reversal bar in the direction of my trade. My first profit target will be $100. When that profit target is reached, I'll go break even. Notice that the only thing that has to be done here is moving stops. Initially, below the window of opportunity, above the window of opportunity. Second stop movement, above or below the reversal bar in the direction of the trade. Take profits on the first contract at 100 and move my stop to break even. I've pocketed $100. I have that confidence through the memory of success. No more stop movements beyond the break even. And I'm either going to make 200 on the second or go break even. Guys, that is the most mechanical approach. If you embrace this, and I'll put it in the room one more time. If you embrace this simple plan in the beginning, your ability to read your charts is going to go up exponentially. They're waffling, aren't they? 1, 2, 3 divergences, all going higher. Divergence high, absolutely no trigger lines through it. Price reaches support, absolutely no trigger lines break through. We've reached an area likely to stop the market, haven't we? A lot of waiting today, guys. A lot of being patient today. A lot of waiting for rules to be met. Is there crying? There's no crying in trading. Ed, what are you tripping over to get those dollars? Feels like pennies. But where was your termination condition? You're still just chasing green and magenta lines. Do you have a reason? Gary, let's see what you did. Gary says, great bottom, strong triggers, not worried about the mid-band, picture perfect entry. Looks like you took profits on a couple already. And should it decide to continue up, you will continue to get paid. Nice trade, Gary. Great. You've got your stop right at a mid-band inside of favorable large triggers, but with those couple divergences, good recognition that it may push lower. Miss Alyssa, same trade, beautiful entry. Strong triggers, rules 1 and 2 met. Pull back to an area of support inside of favorable large triggers. I love everything about this, Alyssa. What is that, 10 and 14? Quick $240. It feels like patience paid off. Beautiful trade. Pays for your coffee. You must have some amazing coffee. And now Gary's waiting for that resistance to clear. He says, I am not trading in determination conditions. I'm inclined to agree, Gary. Life is too short to trade into brick walls. There's your pivot stop out. Absolutely no trigger lines break through. Trigger lines aren't through the areas. What's the 21-3 chart, Gary? That one right there? I like it. Look at that pivot stop out. Termination, termination. Don't let a small chart talk you into a trade, right? Rules not met here. There's no odds favorable momentum. Everything is flat. Pivot stop out directly into resistance. And look what happened. Pivot stop out. Your smalls are starting to work below your large. They're not there yet. You're starting to roll over here. It's all about patience, guys. Waiting for the best of the best. Earl, I think we saw this one. That's a double post. Odds favorable. That's where we talked about stops at potential entries. Do you remember that? Rules 1 and 2 met. Rule 3 says you should have been looking for a short there. Jose, let's see what you're doing. Odds favorable from a good termination. Good termination. In at the best spot. You had that reversal bar to save your bacon a little bit, Jose. Yeah, that was your best one right there. If you took this one, see that reversal bar in the direction of the trade? Could have tightened up. At that point, it was already doing it. Turn that 13 tick loss into a 3 tick loss. Does that make sense? Flat dead triggers. Guys, you notice how this fight happens? right at Fibs? Is it a coincidence that right at this key area that you guys knew about, there seems to be a huge fight with flat triggers, buyers and sellers trying to figure out what to do? Give me a Y in the room if you see it, that they can't establish dominance either direction. I see it. So what's your best option? If rule number 1 isn't met, what's your best option? Should you guess? Should you hope it goes up because of 2 divergence? Should you hope it goes down because of a pivot stop out? Should you hope it goes down because it's red? Should you hope it goes up because those are green? One down, one up, one down, one up. If it's going to go, guys, it's going to go. They're going to give you an opportunity. Mama always told us, when in doubt, don't. There's your line in the sand, isn't it? 54.25. And they demolished that line in the sand. Smalls up, large up, through the area. Everything's going. I've even got an area of support inside of favorable large triggers where charts agree everywhere. Little bit of patience goes a long way, guys. Little bit of patience goes a long way. And they went right to the target. So now we go back into it. Price reaches resistance. 2 options. Either resistance breaks with odds favorable momentum, we continue to look for longs, or resistance holds, everything rolls, and we start looking for shorts. Support. Absolutely no trigger lines breaking through. You guys seen this picture? Ah, my shark picture's gone. 2 types of people in the market. There are sharks, the big money investors, the people that create the momentum, the people that establish the tops and bottoms, the people that give us our rules 1 and 2 being met, and then we can be the remoras, guys. We can let them fight at the key areas. We can let buyers and sellers sharks fight it out for supremacy. And that's exactly what they were doing. Well, let's go back to the ES real quick. Sellers to buyers to sellers to buyers to sellers to buyers to sellers. That fight was huge. And then the buyers just won. We don't have to get caught up in this nonsense. We can just wait for strong triggers, for no termination conditions, and when we get it, we can go to that area where the market is likely to continue. Guys, you have the advantage of identifying these areas where other people don't. You have the advantage of knowing where the market is likely to turn and then using that momentum indicator to decide whether or not it's probable that it's going to turn or probable that it's going to break. If you scroll back and you look at odds favorable momentum going into areas, areas can break. But once again, here's your fight. Sellers push it, buyers fight back. Sellers push to that key area, the buyers fight back. Nothing to do yet. We're waiting for the sharks to finish so we can take advantage of all their hard work. All right, Bobby T, let's see what you did. Just hit enter, Claire. Once you put it in the chat box, you should be able to hit enter. So you can either, let me pull up a picture for you. Actually, let me go to Bobby T's and then we'll go after yours. I'm sorry. I get distracted easy, guys. Bobby T, you had smalls below the large. The large are wide. They're angled in the direction of the trend. I like it. You had a pullback and you get in early, right? You get in not at the area inside of favorable large triggers. Moved your stop too early. I'm glad that you recognize it, Bobby T. Makes more sense, doesn't it? We'll pay good money for those fibs. Use them. Rule number 3 gives you the best chance of success. If you decide to get in here, your stop has to go up here where the market shouldn't go. I think it's a perfect read. You had every advantage. You just got a little antsy. Maybe because you didn't catch this one over here. Claire, are you using Capture or Snagit? And Bobby, by waiting for the area, it gives you a little more confidence on that stop move. Using Capture. So let's go through the whole thing. Let me pull my Capture up real quick. We all do it, Bobby. In the beginning, we get in early because we don't want to get left behind. And then we get in late because we don't want to get run over. And then we get in perfect because we've done the study to trust the process. But I see you're live. And you're trading with fear. 6 tick isn't a good stop, is it? That's a little light, which means you don't completely trust the process yet. All right, Claire, you ready? You said that you can capture it, right? You can take that picture, no problem at all. Once you upload, well, there you go. Claire, I'm the best teacher ever. I didn't even get to the end of the lesson and you got it. Did you have to Control V to get it into the room? If you have the pop out, it's that Control V. Modest too. Oh, you just had to hit enter. You were almost there. No problem. And there's your test. Good job. All right, now I know you can do it, Claire. I want to see all your pictures, everything you do. Guys, we're at a very key point in crude oil right now. We've reached that area of support where there was a divergence low. And look at that jump. The sellers just pushed it like it was going out of style. That was fast. I love it. Claire, the only thing that makes me happier than being on vacation in Florida is seeing you guys post pictures. The more pictures y'all post, I was talking to John about this last night. And I was saying, man, I have watched so many people who post so many pictures make money now. And he's like, it's been the same recipe forever. The people that post the most get to where they want to be. And it's such a simple recipe to get to where you want to be. Let's go to the tutorial page real quick. I want you guys to see this. It's easy for me to say. It takes a minute for you guys to believe. But this is your path to becoming a confident trader ASAP. And you'll notice that the first thing that it says, all capital letters, off to the side so you don't get distracted. Post your trades in class. Show me what you're doing. Guys, I've spent years looking at these indicators, learning to read these indicators, learning to read your charts and give you amazing feedback. I can't do that if you don't post. Make sure that you post. You'll get there. Gary, you're still new. Track your real-time performance in a spreadsheet. Keep tabs on everything that you do. If you take a winner, put it in a spreadsheet. If you take a loser, Put it in the spreadsheet because there's something to be learned from both. More so the losers. The more losers that you post in here, the quicker you eliminate those habits that are creating losses. Or the flip side is you begin to understand that you did everything right and it's just a cost of doing business. Anything that wins 70 to 80% of the time loses 20 to 30. That's not the spreadsheet that I wanted. I want you guys to see something. Here's my spreadsheet. This was posted in class yesterday, I think, or we talked about it. Odds favorable momentum, no termination conditions, beautiful pullback to the area inside of favorable large triggers. And this one just doesn't work, right? And Jose, this looks a lot like the one that you just took. That reversal bar gave you an opportunity to manage out a little bit quicker. But this is an absolutely perfect setup. So much so that I put it into my favorite trade setups, even though it didn't work, because that's exactly the trade that I want to take. That's the trade that gives me an advantage, that wins more than it loses, and I have to be able to accept these losses as a cost of doing business. Trend trade long, 2 ticks risk. If lower divergence prints, you're going to get out. Is that a reversal bar marker on 8, John? Good stuff. In a trade, has a plan. Knows what it takes to get him long. Knows what it takes to get him short. There's that divergence that printed. Guys, 50-50 trade on crude oil. Smalls are through, large are not. No divergence. Tiny window of opportunity. Is anyone going to show me a short from 40? Assertive management, you've probably already exited at the fib that has the potential to break but has not. Break even, absolutely nothing to lose. Everything to win if this market decides to continue down. I'm just going to build my pictures. Entry on the 5-1 must be perfect. What's the perfect entry? No divergence? Yes. Strong triggers? Yes. Small window of opportunity? Yes. Take and manage. That's what my plan says. Guys, I can copy this picture. I can create a screencast link. And I can bring it up. And I'll put it under, what should I put it under? How about management things? I can put a link in there. We'll call it perfect 50-50 trade. I can go back and study this and do this over and over and over. Said you're picking a spot for lower. If it hits the small trigs, roll up, maybe one continuation long. If it gets there, right? It may or it may not. John knows that he doesn't control that. He can only have a plan based on if then. If this happens, then that happens. Guys, I'm going to take a few minutes. I'm going to leave you guys on 2 charts, S&P. If your rules are met, take a trade. Push that button. Take a picture. Post it in class. If your rules aren't met, don't hope. Take a picture. Tell me why your rules aren't met. I'm going to take a few minutes, reload my water, and I will be back in just a moment, guys. Last hour belongs to you. I need your questions. I need your pictures. I need your posts. If you guys aren't posting or talking, it's going to be a very quiet last hour. I'm rooting for you guys. Show me some stuff. Back in a minute. All right, guys, I am back. Not done for the day, Gary. Just had to take a break. Too much talking. Trade junkies. Morning, Ed. Long time no see. All right, guys, let's see what I missed. Looks like you guys are posting some stuff. John Novak gave us a post. He was looking for that continuation. Didn't go, didn't get him. That's all right. Ed, let's see what you did. Your 13-2 has strong triggers. Your 5-1 doesn't have any areas inside of favorable large triggers. You're not coming from a termination condition, not a valid HVA trade. It's hard sometimes to watch that market not go with you. Divergence. Everything on the wrong side of the triggers. Waiting for lower areas. Guys, that's chart reading. That's exactly what you're witnessing right there. That is somebody that has taken a lot of time to read his indicators, to recognize patterns, telling himself this isn't the best look. Might be time to hold off just a second. Wait for the advantage. Ed, you took it anyway? NASDAQ was headed down, so you played it tight. Played it tight. All right, guys, I'm going to let you in on a secret real quick. And this is just me. This is something that I have learned for myself and something that I've learned through watching people. I've never had, in all my time in here, somebody follow the rules the way they're written and not do well. I promise. Myself included. I've never followed this plan and not been successful. Nowhere in my plan does it say jump in. Nowhere in my plan does it say watch the NASDAQ. Guys, you can do your own thing, but let me know your rules. Let me know why you got in, and we'll talk about it. We'll see what we can do. There's a NASDAQ 21.3. Nice. All right, John doing some if-thens. If because of these divergences, because of the smalls below the large, because of the large rolled down, if it reaches 38, 57, 68, John will reevaluate his indicators and see if he has an advantage to look for an opportunity to the long side. And no one says I'm going to start the day with 2 losers, then take low probability trades to run commissions up. Yet you do. What's that definition of insanity? Does anyone remember that? Doing the same thing over and over, expecting different results. Who is this? Ed S. I love, Ed, that you don't show me your 5-1 anymore. You just say everything's going up and I went long and got paid. Nice job, Ed. Good to see you in here. Good to see you doing well. Nice job. Ed, you did a great job developing your plan, deciding what it's going to take to get you into the market. And man, you have done a great job of sticking to that plan. Guys, when I talk about it, when I talk about the people that post the most typically make the most. Ed, you're a good example of that. Nice job. John put in, Jay Blay quoted me. Guess I said this long ago. He pasted yesterday at 10:59 a.m. Here's a JN quote I like in case anyone wants a reminder. Being patient and waiting for the best of the best, rules met, has always been the way. You have to have a constant dialogue with yourself. Stay calm. Are the rules met? Am I trying too hard? Everyone gets out of whack. Bad traders stay out of whack. Good traders recognize. Walk around the house. Let the dogs out. Regroup. Amen. John, Ed's developed a trade much like Ron's. When everything is going in his direction, when he has the momentum, he has the direction. He takes a little unorthodox entry when he clears the spots, and he respects the places where it could stop. It works. I've watched him develop it over the last couple months, and it works for him. Hold on just a second. There's an area likely to stop the market, isn't it? Price reaches support. Absolutely no trigger lines above or below it. Large triggers never blinked. I almost feel like that is the same spot. Let me double check. Where John Novak read his indicators and said if the market pulls back to this area, it's a good location for potential longs. John, I suppose you were right. Gary, let's see what you got. Gary, I think this is a double post, Gary. This was the last one that you posted. Recognizing termination. Termination. You said you're going to let stuff clear before you make a move. Yeah, Ron. Ron, you know what it is? There's the magic word right there. Doing the same thing. Every trade. You are the epitome of consistency. Every trade you've ever posted in this room in the last 2 months looks exactly the same. It's well thought out. It's rules met. It's consistent. It's repeatable. You have a plan. I appreciate seeing that very much. John Novak, let's see a picture. It takes the stress out, doesn't it? Trend trade long right here. Not 100%. Odds favorable momentum. But guys, how many times today have we seen an area overrun, pull back to support, and finish the move to the fib? That's taking advantage of that pattern through pattern recognition. Crude oil. They sure turned around, didn't they? And it looks like there may have been one opportunity in crude for a short. Let's go back to that 11 o'clock hour. I think I was on break. Pulled right back to an area of resistance inside of favorable large triggers. There's that other look right there. Good stuff, guys. All about patience. I think Tom Petty said it best, that the waiting is the hardest part. Sorry if I get that song caught in your head. Now we just have to wait at the termination condition. It either breaks or it doesn't, right? It either rolls or it doesn't. John Novak, let's see what you did. Everything set up, so you went long. Smalls are strong above. You're not getting out. You'll manage your risk, give it an opportunity to break. Pragmatic decisions about stops. Gary, same entry. Quick little pullback, very nice. Target 1, target 2. Exit. Gary, great trading. I see you're on that top step. Nice job. You guys wondering about funding? One of the things a lot of users are doing, I want to show you these. Apex account funding, Elite Trader account funding, Top Step account funding. Guys, these are all funding firms. It basically allows you to trade with their money. They're going to put you through the ringer. They're going to make you prove consistency. They're going to make sure that you can make money and not blow out accounts. But if you pass their combine, typically these allow you to trade with their money and keep 80 to 90% of the profits. Look into that. We don't work for them, but you can certainly reach out and see if that's an option for you. Close after the white bar at the spot. Good reasoning, John. Joel F., let's see what you did. Everything breaks. You take a quick little pullback and make that money. Joel, nice trade. Market flow helped it out as well. You know, one of the great things, Joel, and guys, let me know if this makes sense to you. Joel's 13.2, his 5.1, and his 8 range are all green. Every trigger line on every chart is up. Every background is green. Every trigger is up. It almost becomes effortless if you're willing to have that sort of advantage. Let's go through and look at a couple. Everything is green. The market continued up. Everything green, the market continues up. Everything's red, and that market pulled all the way back to support. Green, red, red, didn't work out. Green, red, red, didn't work out. Everything is green. The market kept pushing up until it went red. Sometimes it just doesn't work out. Everything is red, the market goes down. Everything is green, the market goes up. Guys, are you seeing a pattern here? Are you seeing a theme? Everything is green. The market tends to go up. No guarantees. $860,000 payout. That's a good payout. He had 7 plans, 7 accounts. Ed, I know you've heard it. He's told it to me. Eventually, you hate losing so much that you follow a plan. Hypothetically, guys, tell me what you think about this. What if you wrote on a giant piece of paper all the charts must be the same color? How many errors could that pull out of your trading? If you go back and look at your last 20 trades, how many would you have not taken based on that rule? Or how about all charts agree? Even less wordy. And if you start with that every time, all my charts agree, all right, let's make sure that I have odds favorable momentum. Let's make sure that I have a clear path. Let's make sure that I'm entering the market in an area inside of favorable large triggers. But my precursor is that all charts agree. I can tell you it would have saved me from an awful lot of silly and an awful lot of heartache and mistakes and opinions. What do you guys want to talk about? Want to talk about odds favorable momentum? Let's look at a bigger chart and see if there was, oops, I just accidentally opened my 8. Let me shut that back down real quick. That's a 21. It's red. My 13.2 is red. NG time, I'll show you the easiest way to do it. Are you ready? And they're not going to be exactly like, because it's a very different look. If you go to resources, download that NinjaTrader 8 installer, it's going to give you all of the most current everything. It is going to look different because NinjaTrader 8 looks different than 7. And there you go. John just gave you the link to it. There are guys that are a little more techie than me. And then we can get you where you want to be. And that's a great cheat page. So you know, I uninstalled mine, Ed S, but I still have paths to it. If you have any tricks and tips on that, share them for sure. I uninstalled OneDrive on my computer, but it still shows up in my paths. I have to figure out how to rectify that. We're just going to watch the market, guys. I'm going to leave it to y'all to ask questions, to post pictures. Let's make that 13.2 nice and big, see if the rules are met on it. Anything you guys would like to talk about? Any concepts you need a little clarity on? I'm going to open this up especially for my new users, for my demos. How we doing this morning? How do we feel? Two simple phrases, guys. Rules met, rules not met. 50-50 trade. The smalls are through, the large are not. There isn't odds favorable momentum. We're potentially at the beginning. Divergence 2 times on a 50-50 as it pulls back. Some people have a plan that says yes, they'll take that. Some people prefer not to, based on the divergence. This is a medium probability trade. If you decide that that area of support inside of favorable large triggers is your entry, you will manage assertively, correct? You're going to look for that first trouble spot. You'll get to a zero loss level. But it's imperative that you understand that you are taking a trade without the advantage of momentum in an area that has not broken but has the potential to. Gary, you said you're waiting for a pullback in crude. Doesn't look like they wanted to give it to you. So let's read our indicators, guys. Charts are red. Triggers are down. Smalls are inside of the large. Look at that. That was a divergence low to the tick. When did that print? 25 minutes ago. That's where the sellers lost momentum and the buyers absolutely crushed it. And we're right back at that area. $73.25 is an area likely to stop the market based on trigger line location. It also lines up with areas of resistance inside of favorable large triggers, but so does 73.41. If we were in the market for a medium probability trade, probably looking for something within this area here. These are my areas of resistance inside of favorable large triggers, but because there's a loss of momentum on my 13.2, it has the potential to push up beyond that lowest point in the window of opportunity. Let's see what happens. Let's see if not having odds favorable momentum affects the distance of the retracement. On these medium probability trades, as you grow with the software, as you add charts, you could look to see if there's any indication on an 8-range chart. Maybe wait for a market flow signal inside. Let's see if market flow gives us an indication from an area. Now we've reached the area, right? There's our first area of resistance inside of favorable large triggers. It lines up with resistance. It lines up with resistance. It lines up with resistance. No market flow signal. John, nice trend trade long. Everything says up, so you go up. All charts agree. What a great way to start it. Guys, still no market flow signal. What do you think, guys? Anything can happen, triggers. Loss of momentum. What advantage are we giving away? We're giving away the advantage of momentum. Directly from a divergence low. We know it's a key area. You can utilize market flow. Wait for a signal. Just reading charts. What do your rules say? If you're a high probability trend trader, your rules say you need odds favorable momentum, or it becomes a medium probability trade. If you got in at the area of resistance inside of favorable large triggers here at 27, you probably made your $100. Maybe your break even on the trade. It either finishes the move or it doesn't. Oh, process in your media. Edge, you have unprocessed media. We'll give it a second. Now we have a higher divergence. That medium probability trade had to be managed assertively. Here we go, Ed. Small's breaking above, breaking through. Two divergences. Ed, I like this because I like the pattern. That second divergence took out the previous pivot. That previous pivot lined up with a mid-band with an HVA line. Not sure why you jumped out so quick. Same picture. If you have rules for entry, shouldn't you have rules for exit? Guys, there's that loss of momentum coupled with losses of momentum. So Ed, every chart was the same color. Every trigger was up. Every small was outside of the large. And you made 1.5. Guys, that loss of momentum took us all the way up to that next area of resistance and that mid band. Whoops, what did I do? There was your area of resistance inside of favorable large triggers. There's your Fibonacci target. I get it. It's going to be hard to pass that combine a tick at a time, though. Jose trades, beautiful entry. Great first target, probably break even, straight up to the fib. Nice. And Jose, see how it is? It's not quite anything can happen. What it is that acceleration. That's the beginning of the acceleration as it breaks through the area, as it comes from a termination condition. Nothing blinks, everything agrees. Anything can happen triggers. Joel, you waited for the pullback to the area of resistance. I'm not sure what exactly got you in. Here you have a long, here you have shorts. I think you got me an extra chart in there. All right, guys, you ready? I'm going to give you 3 options here in the room. Are you trading to win? Are you trading not to lose? Or are you trading to follow the rules? Because the rules have been proven through study over and over to win more than they lose. Have you ever thought about that? Because you know what I started with, guys? The only thing I thought about was winning. I just traded to win. I really didn't hope. I didn't know why I was going to win. I just wanted to win. So I was trading hope, hoping things worked out for me. And then I traded not to lose. Guys, this is what I've done. This is the process that I've gone through. And when I traded not to lose, I skipped a lot of trades. I looked for reasons not to take the trade rather than asking myself if the rules were met. I exited trades early. The first time I went live, guys, I would take 20 trades a day and be up 3 ticks. I would be down money because of commissions, because I was so terrified to lose. And eventually it clicked, and now I just trade to follow the rules. And I say it a lot, and it's easy to say, but we all have to go through this process. Did I follow my rules? Are my rules met? If I follow my rules, have they been proven to win more than they lose? And there's this freedom. There's like this just amazing sigh of relief that comes from believing in your rules, that comes from taking the trades that you know win more than they lose. And you'll deviate, you'll make mistakes, you'll trade to win sometimes, and you'll trade not to lose sometimes. But everybody has to make that adjustment to where you simply follow the rules. My rules have been proven to win more than they lose. So if all I take are these rules that win more than they lose, if all I do are take these rules met trades, there's a strong probability that I'm going to win more than I lose. Almost sounds too simple, right? If you're trading with the intent of not blowing out your combine, then you're trading to not lose. And what stinks when you trade not to lose is it looks like this a lot. And then when it does this, when it does everything that it said it was going to do, then you start breaking the rules to get it back. Anyone ever done that? Your brain is going to be your biggest enemy, guys. I like it. Looking for one more good rules-based trend trade. What about a medium probability? Strong trending market. Everything says up. Window of opportunity that lines up with a window of opportunity. Not a mind reader, David. I've just made every mistake that you guys will ever make, I promise. One of my favorite reasons to teach this room. And there's the Ed trade. Getting that NASDAQ. Nice job, Ed. Everything says down, you go short. That's a great way to start. Everything says up. Only look for longs. Does everybody have their high probability trend trade checklist? Is anyone using this? Everyone that I've talked to that uses it or has used it in the past has been in that 85-90 range. 85 to 90% winner range. True story. The more complex their checklist gets, the lower their percentage goes, which is okay. Because if you're winning twice as much as you're losing, guys, you can make money at 50% winners. Constantly now at 87. That's an amazing percentage. People always ask me, does it work? Does the software work? Software works amazing. Software is absolutely flawless. I did, Ned. Post it. The question they should be asking themselves is, can I work? Can I follow rules? Can I trade with the trend? Can I trade with momentum? Let's see that picture, Ed. And guys, you don't know this, but I feel like I have an investment in each and every one of you. Like, I get excited about your potential success. I get excited when you guys do well. Only 20 grand? Holy smokes. 1,200 trades? That's not so bad. 100% profitable. $20,000. Gary sharing his. Yeah, Ron, me too. Ask my probation officer when I was a teenager. Rules are hard to follow because they're typically not the most fun route, right? Gary, this is a great checklist. Guys, having a checklist is the first part. Holding yourself accountable to the checklist is the second. Was that 206? Yep. You're right, David B. I was an English lit major. Numbers scare me. Amen, John. Termination condition. Pivot stop out at a termination condition. There's no more long trades, right? It gave you some great shots to get right up to that red line. Ed S on the second, 94% winners, $2,800. Your winners were 13 times bigger than your losers. It's beautiful. How long have you been with us, Ed? That's true. 6 months. Joel, strong triggers, hadn't quite reached the area. Beautiful entry. Great first exit. Letting that second one run if it's going to. Joel, nice job. John Novak's. Whoops. I think I've already got this one saved. There's that plan, guys. Writing out exactly what it's going to take to get you in, exactly what it's going to take to get you out. I think a lot of us underestimate how important it is to have a plan. Never came back. Remember that pattern we talked about? Let's see if these guys decide to push through support or if they decide to go up. Right now, we're in a hurry up and wait stage. Everyone who loses, I did. There's a lot of very successful traders in Nexgen, and this is the most common thread. If you don't write down a plan, you don't have a plan. That's it. If you don't write down a plan, you don't have a plan. And if you don't have a plan, how could you ever be consistent? And stick to it. Guys, you know what I've done before? I've had 5 winning trading days, and then I get smart and I abandon my checklist and I take a big step back, and I got to take a look at myself and go, oh, you didn't follow your checklist. Then you commit to it again. Checklists are everything. Back when I was managing restaurants, guys, I used to teach managers. They would send them from across the country to come and train with me because I was a systems and routines guy. And every manager, when they had my checklist in hand, was the smartest manager the company had ever seen, and high hopes for every one of them. Then right around 30 days, they all get too smart. They're like, well, I don't need the checklist anymore. I'm brilliant. I've done so well these last 30 days. And then they all make mistakes. And it's okay. It happens. People that commit to the checklist and can follow it verbatim are the people that typically find the success the fastest. John, your mama lied. You're not special. No one's exempt. You got to do the work. That's it. Guys, you remember when Atari 2600, a lot of you are this age, came out with Pac-Man, and it was horrible, but we were all excited about it. And then we became more excited when we realized that there was a pattern that made sure that you never died. Does anyone else remember that? Galaga had a pattern that made sure that you never died. Every video game had a pattern, Donkey Kong, that you didn't die. Guys, that pattern is your checklist. And when we were kids, we wanted to not die so badly that we would learn and follow that pattern. We would invest every quarter we could find into creating our knowledge base of that pattern. Guys, trading's no different. Now we're just grown up. And this is our favorite video game, and there's a pattern that keeps us in the game. Embrace that pattern. Learn it. Make that pattern yours. Pays dividends. Guys, special treat for you. John Novak will be your teacher for the next 2 days. For those of you that are going a little next level, that are beginning to work on plans outside of the basic, get in here with 1,000,000 pictures. Tap into that brain. For 27 years, John Novak has been reading charts, understanding expectations. Guys, don't waste this one. Every trade you take, post it. Every question you have, post it. I want him to call me tomorrow afternoon and go, man, they wore me out, Mark. It's about time you had it asked you. He won't. He won't kick you out. But he definitely won't tell you that that you're special if you're not. Walking is the new running. Awesome. Have a good one, Ron. We'll see you tomorrow. We will see you tomorrow. Ed, tomorrow I want you to do one thing for me. That's it. All charts agree. Guys, you know what the one thing that I've had? People call me. People text me. People Skype me. And they always say, oh, Bobby, I love this stuff. They always say to me, you know what? I'm struggling, Mark. I'm struggling. I'm not winning the way I need to win. I feel like I'm chasing everything. And I've put this out there. Whoop, that's my wrong checklist. I like this checklist, but that's not it. And I've put it out there and I said, hey, if you're really not doing what you want to do, if you're really not getting the results that you want to get, do me a favor. Trade this high probability trend trade checklist for 5 days and let me know where you're at. Guys, I've had people tell me, pardon my French, that I'm full of crap and this stuff doesn't work. And I put the same thing on them. Just follow the checklist for 5 days. Let me know how it works out for you. I've had 2 or 3 people accept the challenge and actually finish it. Most people would rather be busy than profitable, is what I've found. Most people would rather be in the market rather than successful. If you get 3 charts to agree, you have a 50-50. And then Ed, what happens if you add in momentum? You think those chances go up? And what if you add in a clear path? What if you add in a backstop? So guys, I'm going to put the challenge on you. If you're not hitting 70, 65% winners, take the checklist, give me 5 days. It's just like when I was a personal trainer, guys. I'd put that on people all the time. Send me a picture of everything that you eat for 24 hours. Guys, 99.9% of the world won't do it because by 9 a.m. they're stealing Cheez-Its from the kids. That's it, Gary. It's just a checklist of what to look for. What has to happen to take a trade? And then that's the easy part, isn't it, Gary? This has to happen for me to take a trade. The difficult part, am I going to wait for that to happen? That's where people fall short. But if you never write out that checklist, the chances of you following a checklist are pretty much 0. So, good stuff. Guys, I think that's about all we've got today. It's getting quiet. I'm rambling. Go home, rest up. Tomorrow morning, John Novak is going to get you. It's going to be a great day in this room. I'm excited for you guys. Have an awesome afternoon, guys. Enjoy your evening. Do a little study. Take a lot of pictures.